So as more rates trickle in, let's look at a very interesting report that's come in from HDFC Securities. The report is talking about PSU banks and suggesting that PSU banks could be experiencing early signs of a secular turnaround. HDFC Security feels that selectively there is good risk reward and plenty of opportunities out there that investors could look at. So let's discuss this with Krishnan ASV, who, of course, looks at the banking space very, very carefully from HDFC Securities. Krishnan, great to have you on. Thank you for joining us this morning. So, just before you joined in, we were discussing this lending consortium that apparently is looking at giving a loan finally to Vodafone Idea. And our previous guest, Deepan, was saying that if anything, that's going to cast a shadow on banks, particularly the PSUs who do the bidding. But that aside, I mean, just take us through the genesis of that thought process. What do you see ahead? I mean, X of this Vodafone issue, is there a real opportunity in PSU banks now?
Yeah, hi. I mean, many thanks for having me on the show. So, look, I think as you put it in your opening remarks as well, what we are seeing is early signs of a structural turnaround in quality of customer franchise, quality of loan book, and quality of earnings in the PSU banks. These are still early days. We believe these are not transient. These are fairly structural. There is a secular turnaround here. And as I said, it starts from the fact that the customer franchise has been worked on. In fact, one of our hypotheses is that PSU banks will remain retail heavy in their loan book, and hence the lumpiness that you saw in the 2015 cycle is not something that will play out in PSU banks anymore. Retail is far more kind of granular. Banks have become a lot more sensible, a lot more scientific in how they identify risk, how they manage risk. And so we believe a lot of PSU banks are beginning to catch up. It's already reflecting in some numbers over the last couple of years. Just to put a couple of numbers there, gross slippages and net slippages, PSU banks are actually more superior than private banks, right? As far as corporate is concerned, as I said, a lot of that corporate capex has generally bypassed the banking system. Not just a lot of the corporates are deleveraged. They are essentially able to borrow from the bond markets at cheaper rates, and so it will continue bypassing the banking system.
Okay, so the thing is that you're saying that the book has been growing more on the retail side, and therefore you're expecting things to continue. But Krishnan, what about the pickup in the corporate cycle? So there's two parts to it. One, of course, the quality of the book, which perhaps is a lot better now after the last cycle. The second is the growth aspect itself. I mean, what kind of growth numbers are you ascribing to the PSU banks? And would that include a turnaround in the corporate credit cycle anytime soon?
So, as I was saying, I mean, what we are pricing in is roughly about a 13-14% kind of CAGR for the PSU banks. That's not going to be very different compared to where the rest of the system is going to be. So, there will be outliers.
Oh, okay. I think we have Krishnan on a bad line, so not able to hear him. But for the benefit of our viewers, just sort of outlining some of the points here. They actually have high conviction buys on BOB, on Indian Bank as well, I think. They like Union Bank. They've initiated coverage on Union Bank. So these are some of the names where they seem to have conviction going forward. Let's see if we have him back. Do we have Krishnan Bank? Not yet. We'll go back to it. Thesis seems to be that PSU banks are offering both growth and valuation comfort. And 12 to 13% is the kind of growth in the book itself that HDFC Securities is pricing. And Krishnan, go on. I mean, we lost you there. You were just completing the point, explaining how the growth is going to be 12-13%, which is in line with overall system. Just complete the point. So then, is it the valuation comfort that's drawing you towards PSUs? And give us some top ideas as well.
Sure. So, as I said, growth for the large banks is likely to stay within the 13 to 15% band. There's a Bank of Maharashtra, which we believe because of the base effect will probably do better. But generally, these PSU banks are in a very sweet spot. The kind of runway seems fairly clear in terms of where they are headed in terms of the loan book and the quality of the book. Purely in terms of our pecking order, we have State Bank of India right at the top. We like Bank of Maharashtra, Bank of Baroda, and Indian Bank.
Krishnan, just that one quick point, it's a bit of a tangent, but I must ask you, if indeed there is this move to lend towards Vodafone Idea, and I'm not talking about the actual exposures, it's going to be a consortium. I don't know how much they'll do, 20,000, 10,000 crores. We don't know. It's a story that's out there right now. Will the market view this very negatively? Will that at all change your view, given the moral sort of implications around it?
Yeah, I think I kind of agree with the earlier expert. It may not be looked upon very positively by the market, right? I mean, it still depends on whether this is rescue capital, whether this is growth capital. Given where the franchise is, I would assume this is likely to be rescue capital again. Rescue capital is not something that the market looks upon very positively. I mean, these are still in the media bites, so we really don't know how this is going to pan out. But as I said, generally, we believe that the entire banking system has actually been able to ring fence itself from corporate credit. Corporate credit cycle, the large corporate credit cycle, especially the CAPEX part, generally tends to bypass the banking system nowadays. We believe that will continue. That will continue to pan out as well.
Okay, Krishnan, just one quick question before we let you go. SBI could possibly be looking at a fundraise. If you could tell us whether you're factoring that in, what are the current ratios, and how would that change things?
So right now, I think they looked at about sub 11% kind of a CET1. Look, they just did the Yes Bank stake sale. They are looking at a couple of other alternatives, plus the QIP of about 25,000 crores. So roughly about 40,000 crores that gets added to their kitty if everything goes well. They are bracing themselves. I mean, of course, there are going to be mid-sized MSME corporates that are likely to come through as well. We are in a stage of the rate cycle which will kind of stimulate growth. So I think they are poised for growth. They are poised for growth capital, and this will probably improve their capital ratios by roughly about 200 basis points at the very beginning.
Okay. All right. Got it. Thanks very much for that, Krishnan. Good conversation.